so much risk endemic in the system, Rob, that I say gold and silver is probably the first place that you go from a safety perspective. Silver is a little bit more speculative, gold's a little bit more stable, but both precious metals are gonna do well in this type of environment when you're raising rates. There's pressure on the stock market. The stock markets right now have declining open wedges, which means they're probably not gonna pop up anytime soon. But I do see one more melt up. I do see another melt up coming in real estate and the stocks, because I think the Fed is going to be forced when the economy starts to tank to bring out the helicopters.
Welcome to Inside the Markets, flagship podcast of StockPulse.com. Joining me today to discuss the precious metals markets, specifically that gold breakout, Robert Kientz from Gold Silver Pros. Robert, appreciate you taking the time here. I hadn't seen you since the StockPulse Silver Symposium back in the fall. Once again, really appreciate you making the trip there. It was quite an event, and especially for our first year, and look to do it again in late August. So obviously extend that invite to you, and look forward to hopefully seeing you there. But I guess in the meantime, gold broke out yesterday, so I figured I had to get you on here and get your thoughts on this. So please, Robert Kientz, thanks for joining me, and please give us your thoughts on precious metals markets here, and more specifically gold breaking out.
Yeah, Rob, thanks for having me on the show. I appreciate that. And thanks for inviting me to the conference. It's a lot of fun. I was the first conference basically I'd been to in a year and a half when we went up to Idaho. And it's a lot of fun getting to meet people in person. That's why you go to conferences, really, for me. Education kind of takes a back seat. It's, networking, making connections, and seeing people that I speak with every day and seeing them in person. So can't wait for August. Super excited for that. We will definitely be there covering the conference. And we did have a really exciting day in gold yesterday. It hit 1900, really, and stuck over 1900 for only the third time in history, which is big. Now it hasn't hit its previous all-time high. It hit in 2020 of around 2060 in that range. But the fact that it's broken out of this 18-month consolidation, I think is very positive for gold people.
Yeah, so let's get into a little bit of maybe a forecast here. Conditions seem to be right. The Fed looks like they're going to raise those. So what's this do to things here? You've got in an environment where maybe they weren't, gold should explode. Now that they tighten up here, kind of how do you see this thing playing out here?
So I think what's driving it right now is really the geopolitical with Ukraine, Russia, Ukraine, NATO type of situation. Now they haven't really gotten into a hot war, but there was news out yesterday. There were some rockets fired back and forth. Right now it's just saber rattling. I don't think anybody wants to start World War III over this. But, where there's smoke, often there's fire. And I think the market's starting to recognize the geopolitical risk and how that's going to weigh on markets. And so I think that's pretty much what's driving gold right now. I do think there's anticipation of higher rates from the Fed. Bullard came out, I believe it's yesterday, or maybe it's Tuesday, and said he had previously been more aggressive than other Fed governors. He wanted to raise a half point the first time on interest rate instead of a quarter. Now he's saying we need to get it up to 1% by July, which is very aggressive. I'm not so sure that we can get to 1% without a strong market correction. Last time they tried to raise interest rates, I believe it was fourth quarter or throughout the year 2018, fourth quarter, we had the big 20% stock market correction. And Powell has left himself an out because he said in this December statement for the Fed that, if they do raise rates and taper their bond purchases and scale those back, if the market reacts to that, they can always stop. So I think what you have right now is sort of an internal war going on in the Fed as to whether they should be super aggressive or not as aggressive. I think they want to raise rates, but if they do, how's the market going to react to that? We've got raging inflation. They know they need to raise rates, but it's not 1979-80, Rob, where, Volcker can raise the interest rate to 18%. You cannot do that here. The situation's different. Too much debt in the system. It's just, not feasible. So they're going to try to manage as they go through, but I don't see a whole lot of really good options for them.
Yeah, let's beat that inflation drum here for a minute. Their so-called numbers are already at record highs. I'm sure we were aware of John Williams' real numbers. So the average person, if you start running the numbers, they're going to run out a month a lot sooner here, run out of money at the end of the month sooner here. So I guess let's get into maybe how to get ahead of this thing here. Obviously, you're in the precious metals game. I'm here with you. I beat the drum of the equities a little more, maybe or maybe not, but that's certainly what I do. I see a lot of value in there if you can pick the right ones. That's a tough game. So maybe let's get into a little strategy here for an investor on how to beat this, because I think you'd have to agree inflation is going nowhere. It's here to stay. It's not transitory. It's just going to get worse.
Yeah, it is. The PPI number just came out this week. The PPI is the manufacturers and producing index. And that's the last stage before those prices are passed on to consumers. And it's sitting right under 10% for the second straight month. So the producers are paying more. There's word out that China is seeing high inflation too. And that with some of the shutdowns they're doing to COVID, it's restricting some of their exports. So expect higher prices for the indefinite future here, at least I would say the rest of 2022. So what that, from a strategy perspective, how do you play that? Well, the people on CNBC will tell you, put a little money into gold, but really just adjust which markets you're getting into. To me, I see so much risk endemic in the system, Rob, that I say gold and silver is probably the first place that you go from a safety perspective. Silver is a little bit more speculative. Gold's a little bit more stable, but both precious metals are going to do well in this type of environment when you're raising rates. There's pressure on the stock market. The stock markets right now have declining open wedges, which means they're probably not going to pop up anytime soon. But I do see one more melt up. I do see another melt up coming in real estate and the stocks, because I think the Fed is going to be forced when the economy starts to tank to bring out the helicopters. So I think one more melt up, and then I think you're going to see a bit more of a crash. So from positioning standpoint, if you're just now thinking about it, and I can only say what I do, I'm not a financial advisor, but I went into physical precious metals, and then I started looking at the mining stock equities, because Rob, when you look at the mining equities, probably more so in any time that I've charted in history, they're undervalued relative to the metals. So the metals have gone up, gold since 2016, silver's done pretty well in the last year and a half, 2 years. But the equities have not, and they're making money, especially the gold producers. They're making a little bit more money than the silver producers, but people aren't valuing that. So you have the entire complex of the gold miners trading under their net asset value, meaning the value of the metal they have in the ground. And they're trading below a 1 multiple. Whereas you have the technology stocks, some of them trading at 1,000 multiple, to earnings.
Some of them trade less than cash.
Yeah, some of the miners trade less in cash, and they haven't caught up to where the precious metals prices already are. And given the fact that we've broken out that 18-month consolidation in gold and expect to see gold and silver be very bullish for a lot of reasons, geopolitical reasons for the Fed and rising rates and inflation, eventually those mining equities are going to pop. But because they're so much undervalued relative to where the metals are, they're going to pop harder. They're going to go bigger. And so I think this is a potential go big time in the next year and a half, 2 years for the mining equities. And like you said, though, you got to pick the good ones. The good thing is, though, in a rising market, all of the equities tend to do well. So even if it's not the best company, they're going to outperform other areas of the market. But yeah, do your due diligence on those. Really study the miners, because some are obviously better than others.
Yeah, and let's get into. You just got back from Guanajuato here. Saw James Anderson's project down there in the old El Cubo mine from Endeavor. So yeah, why don't you give us a little update on how that went?
So it went great. I love do the mining tours, probably my 5th or 6th one. They're a lot of fun. They're very informative. It's a good way to understand the actual inner workings of geology, how stuff works. Whatever they put out in their corporate presentation is sort of a sanitized version. And to be fair, you can't put everything into a PowerPoint. But really going on a tour affords you the ability to ask questions, get to know people, do data collection, see the rocks, all that kind of stuff. So they have a very clean operation. I think Endeavor paid something like $200 million for this facility and upgraded, and did some things. So the plant, property, equipment is all state of the art. And I think, if I'm correct, Guanajuato Silver got it for $15 million. So they got an absolute bargain on an already working mill, equipment, and metal in the ground. And what Guanajuato is doing right now is they're mining El Cubo, and they're bringing over a stockpile that they had at another one of their sites, which is fairly high grade silver, and running that through and using that money to then go out and explore. One thing that became pretty clear when we're out there is Endeavor had done a lot. Endeavor and the previous operator before Endeavor had done a lot of drilling. And there's like a Walmart sized warehouse of drill core, about 1 kilometer's worth of drill core, a ton. But they didn't really organize it, right? Everything was sort of done in spreadsheet format, or, I think the new owners, Guanajuato, feels as though Endeavor might have missed some things. And it makes sense. It wasn't the primary project for Endeavor. When they paid a lot of money for it, they thought it was going to be great. And you saw it over time kind of slide down on their PowerPoint presentation to not their major site. And so Endeavor at some point lost sight of what they were there for at El Cubo. I think Guanajuato Silver Management understands this. And really, it's just a race. They've got some good deposits there. It's thin vein mining. And the challenge with that is you really have to follow it closely. You don't want too much waste rock in your mining. You really have to plan it out. And I think they're doing that, but it's a race because you're spending money on exploration, trying to get the right spots for your next, processable ore out the door. And I think if any team could do it, they could. Like I said, they potentially got years, on their sites to do this mine. They have an absolute state-of-the-art mill. We took a lot of video while we're out there, so we're going to put together a video for people to show, one, what a working mine looks like, but also give you a little bit more insight into Guanajuato. We'll have that out in the next week or so. We got to do all of our editing on that. So just stay tuned to our channel. We'll have more information. At this point, I'm not calling them. I'm not calling too much risk, and I'm not saying that it's a home run. I think it's somewhere in between, like most mines are. But I think there are a lot of positive attributes with this company that people, may want to take a look at. I think it's a good management team. I think it's a good deposit. They've got their challenges, but if they play their cards right, it could actually end up being a very good investment for people.
Yeah. So not everyone can get to a mine site to do their due diligence. So obviously having someone like you to tutor them maybe, but I guess, yeah, you paint a pretty good picture of maybe not even being the best company that could actually, high tide raises all boats, right? And I think that's what a lot of these companies are looking for. I guess, how do I phrase this? If you have a company that's maybe a little more undervalued than others, will they take a little more of a shot up, do you think, in this next phase, or will this be, will they just kind of all go together? How do you see some of these guys really emerging? If people can't get to site, they can't get the information. There's a lot of winners out there that have gone nowhere.
Yeah, they've gone nowhere because there's not money coming in the sector. So just to frame this for people who maybe knew the mining sector, a lot of money went into cannabis. A lot of it's gone into the cryptos. With the younger generation, they haven't gotten it as much into mining. And in talking with a lot of the millennials, they would rather invest in technology. It's momentum trading environment. And companies like Apple and Tesla will have teams that will manage their supply chain, so manage their resources. The one thing I tell people is the technology companies can't manage that part of the supply chain from their seat. They're on the far right of the supply chain. They're the producers, right? And the wholesalers. They can't manage what comes out of the ground. So if you're investing in technology stock, it's not like you're getting direct exposure to the mining. And given all the supply chain issues and the deficit we have right now in silver and the demand I think that's going to come from an investment perspective in gold in the next couple of years, I think you want to position yourself on the far left of the supply chain and get into the production part of the cycle. But we really got to get the word out there to millennials because they really don't understand the mining sector. And so a lot of money hasn't come in. Looking forward, I think that offers what I have called an historic and generational wealth building opportunity, because the miners are so far depressed from a ratio perspective of what they should be valued at. And from an accounting perspective, like price to NAV, there's no way that they should not benefit, during the next turn. We know the stock market's not going to stay up forever. We know there's pressure on bonds. The generals are going to come back into the mining stocks. The institutions will come back into mining stocks. And when they do, there's going to be a lot of money there. Now, there's a couple of things for investors to be aware of. Most of these mining companies are so small that they trade on what I would call an alternative exchange, or on Toronto Stock Venture Exchange. Only a few of them are listed on the NYSE or NASDAQ. So the first money always comes into the big guys like the Barrick and Newmonts of the world, First Majestics that are more recognized and trade in the space. But to answer your question, wrap this up, when you have a rising, booming precious metals environment, that's the reason that you have a rising environment is macroeconomic conditions and economic conditions. Those tend to last for a while and get really frothy. And when the metals get frothy, the stocks get even more frothy. People will pile into it. So the good thing about building your portfolio is research all your companies, but not all of them have to hit. If you have 3 or 4 that hit in a portfolio of 10, you're doing very, very well. You're gonna do very well. And I think that's the environment we're setting up for. So people just need to do their due diligence, need to learn as much as they can about these companies, try to pick the best ones. If you have questions, you can always come to my channel and ask. I do a lot of free education for people, so I'm happy to answer those questions as people get interested in this part of the market.
Yeah, let's kind of wrap this up now and get into that. This business seems a little broken in the sense of how important these juniors are. If you went in and interviewed Elon Musk and about his fabulous new facility in Austin and all that, he'd tell you he's nothing without the guys going into the ground getting the goods. But yeah, those are the companies that are barely hanging on. It just seems like it's kind of backward. There should be a lot more of a cash injection from maybe like as you called it, the right side of the column.
Yeah, what happens is most people, investors, will momentum chase. They don't get out ahead, and so they're momentum chasing stocks, tech stocks right now by biotech, all that kind of stuff, because that's what people are putting in. And there's a lot of passive investment income in 401ks and pensions going into that. So it makes sense that those get really frothy. But there's always a turn, Rob, where those markets reach their peak, they have to correct and come back. And then people go into value and into staples. And so what you want to do now, in my opinion, is follow the Peter Lynch's of the world, the Warren Buffett's of the world, look at value investing. Value investing starting to come back into vogue. And commodities are definitely always your ultimate value investment, because like you said, without that stuff coming out of the ground, we don't have anything else. We don't have the technology that you and I are using, to record this show. We don't have planes, we don't have clothes, we don't have anything really without our minerals and without our commodities. So I do think the sector cyclically tends to come back. It tends to be very cyclical. And I think we're about to hit the next big cyclical commodity bull. We've seen highs in zinc and copper, a decade and a half highs in the base metals. Gold popped 1900 yesterday for only the third time in history. So there are signs there that commodities are coming back. And it's definitely, I think, an area that people want to take a look at.
Yeah, let's talk about how they follow you and how they get your advice and keep track of Rob Kientz.
Well, they can follow us in August by coming to your conference, because we'll definitely be there shaking hands with people and hope to participate in that as much as we possibly can. But if they want to find me in the meantime, they can go to goldsilverpros.com. They can go to Gold Silver Pros on YouTube and Twitter. And we also have a podcast. I think it's out on Spotify. You can find us out there now too.
Okay. Rob Kientz, Gold Silver Pros. Appreciate you taking the time, and certainly look forward to seeing August and seeing how this metal market shakes out.
Yeah, me too. Appreciate being back on.